Hey, how you doing? Austin here. Well, this is a subject that nobody really wants to ever talk about, but actually there's a lot of interest around it, and so I thought that it was time to do a video on this, and I found this absolutely awesome piece of content here. And by the way, I will drop a link to the article you see on the screen down below in the description. It will be down there. I promise. It's there. It's there. It's there. Okay. So I want to state up front. This is not investment advice. This is not tax advice. Okay, please consult your own tax professional in your wherever you live, etc. I'm just giving you some guidelines in this video about some myths, myths. Yes, weird word, and debunking those myths. I will tell you up front. Here it is, guys. I've been doing stock trading for 30 plus years. If you make profits, you owe taxes on them. Period. End of story. If you buy a crypto for $100 and when you sell it, meaning like, okay, you bought it for 100 and then you sold it and you got 200 back, you made $100 of profit and you're going to owe taxes on that $100 in profit. Period. Okay. You are going to owe that. And the way that I'm understanding how this is going to play out is that on for those of us in the United States, there's going to be on your tax form, there's going to be a little box. Do you own crypto? Yes or no? And pretty much if you own it, you need to say yes. And if you made any profits, you need to disclose it. Because the bottom line, guys, is the IRS will eventually catch you and they will eventually, you will pay more in fines and fees than probably what you would have owed in taxes. I get it. Hey, the whole tax thing sucks. It is what it is. I know I said it. It sucks. It does, but it is what it is. Okay. And so here you go. So in this piece of content, we're going to talk about the major tax myths and we're going to debunk those. Okay. So look, tax enforcement's coming here. And I'm mainly talking to you guys here in the States. I don't know about the rest of the world, what their tax stuff is, but again, probably some of the same myths apply if you're thinking, if you live in Germany or you live in Australia and you're thinking like, oh, I can do this. Some of these myths will you maybe think, oh, I could do this. And maybe you can't. Okay. Again, you can't. Again, if you make profits, you owe taxes. There you go. All right, here we go. So, let me see. So basically, I want to show you, the IRS has made it clear it is going after people who don't report. IRS summonses to COINBASE, Kraken, Circle, Polynex. I guarantee you probably Crypto.com, all your major U.S. exchanges. The IRS is in the hunt, etc. Okay? So, the IRS hunt for crypto has been compared to the IRS hunt for foreign accounts more than a decade ago. The IRS made a big announcement about crypto in Notice 2014-21, classifying it as property. So obviously, there you go. It is property. Okay. There are already some crypto audits coming out by the IRS, especially in like California with the franchise tax boards, etc. So look, at least now there are tracking and tax return preparation alternatives that can make the process easier than it was in earlier days. Everyone is trying to minimize taxable crypto gains and to defer taxes wherever legally possible. Okay. So these are now the myths. Okay. Myth 1. You can't owe any tax on cryptocurrency transaction unless you receive an IRS form 1099. So that myth saying like, I didn't get it. Hey, I didn't get an IRS 1099 from my exchange. That's not true. If you did not receive a form 1099, you can check the box in your tax return that says you did not have any transactions. But that's the myth. Tax may still be owed even the payer or broker does not file a form 1099. Again, so like here's what this example is. Let's say you have a crypto.com account just for discussion and you had profits. And let's say that crypto.com did not send you a 1099 form. And you think, oh, they didn't send me a 1099 form. I don't owe any taxes. No. Comes back to my original statement. If you made profits in your crypto.com account, you owe taxes, even if you didn't get a 1099. Okay, there you go. That's what this document is saying. Again, I'm not giving you tax advice. Just saying, got to keep doing the disclaimers. Okay. All right. And again, I'm going to link to this article below. So here we go. This is a biggie. If you hold your crypto through a private wallet instead of an exchange, you don't need to report the crypto on your tax returns. Now, this is talking about like if you have crypto in a MetaMask wallet or a COINBASE wallet or a Trust wallet or something like that. You think, oh, I've got my money over there, so I'm not going to have to pay any taxes. Here's the thing. If you're doing trading through decentralized exchanges like Uniswap, ShibaSwap, SushiSwap, PancakeSwap, things like that, there is not a real strong audit, like I call it an audit log where there's like a transaction. Yes, there are transaction logs on Etherscan, things like that. But the thing about it is, bottom line, if you make, and by the way, profits are when you sell. Okay, so you don't, like let's say you bought a crypto for 5,000 and it's gone up in value. Now it's worth 15,000. Well, you don't owe taxes on that if you don't sell it. So like if you hold it, let's say you bought it this year and you didn't sell it this year, you don't owe taxes. Again, not a taxing investing advice. Ask your CPA, ask your accountant. But that's how I look at it. I mean, you basically owe taxes when you sell, when the profits or the gains are what's called realized when you sell. Okay, so there you go. But no, if you have a private wallet or exchange like MetaMask, Coinbase Wallet, Trust Wallet, etc., and you make profits, basically that whole thing is going to be like you got to report taxes. Okay, there you go. Myth number 3. If you hold your crypto through a trust or a company, then you do not owe taxes on the crypto transaction you have to report. Like I have a company, I have an LLC behind that is my business. So in theory, like, I haven't, my company owns the crypto. I don't have to pay taxes. No, it's not the same. It's again, comes back to the same thing. Profits, when profits are realized, meaning when you sell and you made a profit, you're going to owe the taxes, even if the cryptos are owned by a trust or they're owned by a company that you own, things like that. All right, so that's myth number 3. Myth number 4, if I structure the sale of my crypto as a loan or some other non-sale transaction, I don't have to report the proceeds. So let's see what this says. Consider if you're loaning or selling the crypto. The IRS and courts have robust doctrines to disregard sham transactions. Are you getting the same crypto back that you were loaning? Are you charging interest on the loan and paying tax on it, etc.? So again, if it's a real loan, fine. But obviously this tells me that they're going to be on to you if you're trying to kind of get around the whole tax thing, okay? Myth number 5, a crypto exchange is a type of trust since you can't unilaterally change the policies of the exchange. So you do not own the crypto in your account for tax purposes and do not have to report the transactions to an exchange. Again, I get it. They're trying to figure out different ways to not have to pay it. But if you have, like a crypto exchange would be crypto.com, Binance, Coinbase, etc. If you make profits, you're going to owe the taxes. Myth number 6, Congress amendment to Section 1031 of the tax code that limits like-kind exchanges to real property doesn't make crypto-to-crypto exchanges taxable. This could be one. I'm thinking what this reads here is like, let's say you swapped Solana for Ethereum. And then that way you wouldn't have to pay taxes on that. So, and the answer is that what I'm reading here is the short answer is no. If that was a profitable swap, meaning like you bought Solana and say you had $1,000 of profit in your Solana, and then you swapped it for Ethereum, you still had the $1,000 in profit in Solana that you need to pay taxes on. Is really what I'm getting from this particular scenario. Okay. So again, guys, takeaways. It's the deal, right? I mean, read this. You're welcome to read this. But here's the thing. Absolutely, fundamentally, guys, I'm not giving you tax advice. This is not what this is. This is just myths, okay? Go and please talk to somebody in your local state. It's very important to say that, local state, because meet with something like a bookkeeper or an accountant or somebody who can give you guidance on what you do and do not need to do from a taxing standpoint for crypto profits. There you go. But I thought this video was worth making, so there you go. And I'll be interested to see how many views I get on this. This is like, but I don't want to talk about taxes. I don't want to see that video. All right, guys. With all that said, I'll see you later. Take it easy.